Hello guys, my name is Dmitry Bonder and today I'll show you what investment apps I'm using for long-term investing, and I'll explain why every long-term investor with a 3-5 year horizon of planning should use M1 Finance or Vanguard. I'll explain the most remarkable features of M1 Finance and Vanguard and where they're different. A quick disclaimer, this is not comparison of two brokerage apps because they are incomparable. Both have a unique way of investing and I will compare the methods and tools used by apps. This video is more practical point of view on investing long term with these two best on the market apps. Hi guys, my name is Dmitry Bonder. I live in Austin, Texas with my spouse and 3 kids. We are building our family wealth through long-term investing in stocks, real estate and cryptocurrencies. Every week, I research and find reliable source of information and facts how to make the right investment decisions. So if you share my values, consider being part of my community and subscribe. First of all, why is long-term investing very different from a day trading or swing trading? Because you have to build your own portfolio with a different approach in mind. For example, you don't need a brokerage apps with hundreds of graphs and information that are overwhelming. You don't need excessive features of day trading apps where you have quick multi-second execution of your trades. For instance, M1 Finance is a platform built around a fire and forget strategy for long-term investing, also known as a passive investing or lazy portfolios. These are investments that you make and leave untouched for decades, giving them time to mature. And Vanguard is more experienced player in the long-term game of brokerage platforms. Vanguard could be considered as the grandfather of all apps. M1 Finance, Robinhood, Webull are the sons of Vanguard. I'm kidding. Vanguard currently maintains over $6 trillion in total assets, making it the largest mutual fund company in the world. So for long-term investors like you and me, it translates to experience, stability and many investment options. Lots of options. By the way, if you want to join and get $10 from M1 Finance, follow my link in the description. That could be a great start of your investment career. Okay, first thing first. Vanguard's main chief advantage over M1 Finance is that it offers more ways to invest and more account types to keep your money in. In addition to stocks and ETFs, Vanguard let you invest in mutual funds, options, CDs, all which are stable ways to support a healthy retirement portfolio. Plus, unlike M1, you can store your earnings in a wider variety of account types, including 401k, custodial, simple IRA and 429 accounts. That's very important when you build your retirement portfolio, when you want to develop different investment strategy in the long run. This year you want to bet on the whole market growth and buy Vanguard Total Stock Market ETF, that's called VTI. After 2 years you could decrease your tax and invest part of your money to simple IRA or 429 accounts for your kids. That's how I'm using Vanguard and that's how I invest with my spouse. By the way, if you want to help help my 3 little kids to understand why their dad is sitting every day and night and shooting video, please click the like button to promote this video and support all kids in the world. That's all about subscribe and like buttons. I'm kidding. In addition to stocks and ETFs, Vanguard offers mutual funds, bonds, CDs and option contracts. Bonds and CDs can significantly help stabilize a long-term portfolio, so their availability here represents a significant leap over M1 Finance slim offerings. So that all being said, Vanguard isn't just a M1 Finance with more features, or else the choice would be very obvious. Okay, now what about fees? Because M1 Finance and Vanguard are both brokerage platforms designed for long-term investing, both M1 Finance and Vanguard are paradise for long-term investors. They offer very competitive fee structure. For example, sign-up fees 0, commission 0, trading fee 0 for M1 Finance and 0 plus $1 per contract for Vanguard. Okay, what about margin rates and fees? 2% for M1 Finance Plus accounts through 0.5% for basic M1 accounts, and up to 8.5% or about 2.5% interest rate plus 6.5% basic rate for Vanguard. But that's not only one cool feature of M1 Finance and Vanguard. Another very important, I would say key feature for every long-term investor is the system of pies. Pi serves as the basis for users' investment portfolios and demonstrate the distribution of assets and holdings. So all these pies make up various categories of investments intended to offer the ideal balance for your portfolio. Why does it matter for a long-term investor? For example, imagine you selected an asset allocation of 50% stocks and 50% bonds. If 4 years go by during which stocks return an average 8% a year and bonds 2%, you'll find that your new asset mix is more like 56 stock and 44 bonds. For instance, M1 Finance allows you to view a security's performance, price history, expense ratios, and more. It can be hard to convince yourself to rebalance. Selling winning shares probably goes against your instincts, but it reflects one of the simplest distillations of investing wisdom: buy low, sell high. If you don't rebalance, you'll wind up with an asset mix that doesn't match your risk tolerance. And having a larger than a planned allocation to stock may seem harmless when stock prices are up. But no market rally lasts forever, and when the tide turns, you'll be overexposed to the drop. So as the chart below shows, someone who never rebalanced would likely see his or her portfolio's risk level, as measured by allocation to stocks, increase consistently over time. So both companies, M1 Finance and Vanguard, offer you rebalancing or some kind of pies for investing, where you can buy already well-designed, professionally designed pies. For instance, when you set up your M1 Finance portfolio, you'll create target allocation. Maybe you want your portfolio to be 50% Apple stocks and 50% Amazon stocks. Then, whenever money is added to your portfolio, M1 Finance will automatically rebalance your portfolio. This means that if your portfolio drifts away from 50-50, they will bring you back to your target allocation anytime you deposit funds or receive dividends. They will accomplish this by buying more of what you are underweight in and less of what you are overweight in. You can achieve almost the same results with Vanguard if you know how to read and use their huge funds selection. They also have pretty good phone customer service support that can help you to make rebalancing or to choose the right buy fund to invest in. I like how M1 Finance solved this problem with their pies. Perhaps that is their most popular and most unique feature. You set the percentage allocations inside the pie. You can also create multiple pies and have pies within pies. I call them sub-pies. The pie is the basis of the portfolio. For example, you could choose to have 50% of your pie in 30 different individual stocks and the other 50s in different bond funds. So asset allocation is up to you. Whereas traditional brokers are showing you charting tools and technical indicators, M1 Finance uses a visual, intuitive, pie-based interface to prioritize asset allocation and securities choices. And what is even more exciting, if you don't like creating your own pie, M1 Finance offers expert pies created by the staff that you can passively invest in and be completely hands-off. Or you can combine expert pies with your own pies. The possibilities for long-term investing are endless. And what is really amazing, that you can start investing with M1 Finance or Vanguard even if you have a tiny amount of money. A minimum account balance of $100 is necessary to get started on M1 Finance. Once the 100 account minimum has been reached, deposit can be at any amount above $10. Retirement accounts require initial investment of $500. For Vanguard, you don't need thousands of dollars to start investing in an ETF. You only need enough money to cover the piece of one share, which can generally range from $50 to a few $100s. Vanguard has a zero minimum balance to start, but Vanguard requires at least $1,000 credit to get access to some funds. But for some money market funds or actively managed funds, Vanguard has a 3,000 minimum investment requirement. That's the most crucial feature that I like as a long-term investor when I'm using M1 Finance or Vanguard. Of course, some differences can influence you to choose one or another app. In my opinion, right away M1 Finance loses a few points for offering such limited securities options, stocks and ETFs only. You can trade fractional shares, which helps, but the inability to trade options, mutual funds or CDs is a bummer, considering these types of securities are known for lending stability to long-term portfolios. So M1 Finance does offer over 6,000 exchange-listed securities and 80 expert-built portfolios with free access. But because you only have access to two types of securities, your M1 Pie ACA portfolio will always feel like a burger without lettuce and tomato, delicious but incomplete. That being said, M1 Finance's lack of management fees greatly ameliorates its lack of tradable assets. M1 Finance is a robo-advisory firm, meaning a well-maintained artificial intelligence is trading for you, not a human. If that sounds unsettling, consider that virtually all large brokers leverage artificial intelligence in some capacity. It's cheaper for them, thus more affordable for you and me, and AI traders can react instantaneously, making trades 24/7 for maximum returns. So calling back to my earlier analogy, if M1 Finance is a Swiss Army knife, Vanguard is a toolbox, more expensive but more beneficial for long-term investors. Vanguard's chief advantage over M1 Finance is choice. A bigger and more experienced broker in the long-term investment space, Vanguard offers a more comprehensive suite of both securities and account types to customers. There are some other features that I like or don't like in one or another app. For instance, trading windows for M1 Finance are very limited, only twice per day, but on the other hand, they have a good tax harvesting feature. Comparing to Vanguard, M1 Finance has a sexy and easy-to-use application comparing to Vanguard old-school desktop version. Still, I'm not sure that you will be checking this app daily in case of long-term investing. So, I would say all these perks are minor and insignificant. So, my verdict as a long-term investor is following. M1 Finance is your choice if you like low maintenance, lazy portfolios, if you like a simple user interface, it's ideal for beginners, if you're okay with a limited but very easy to use expert crafted pies. On the other hand, Vanguard is your choice if you need access to more types of long-term securities and accounts, plus leading access to low-cost mutual funds, and you are looking for solid reputation and a customer service. In the end, both platforms are free, so it costs nothing to make an account on both and see which you prefer. By the way, there is a link for M1 Finance in the description of this video. So, if you are a long-term investor, what is the most important is that you make a choice and start investing today. The sooner you get started, the sooner your cash will be out there working for you. Thank you for watching this video, like, subscribe, and I'll be doing more videos for you guys. Peace out!